Ever had an asset like that, and it's truly finite, and we only have 1 million Bitcoin more that will come into circulation in the next 114 years. Again, we're in completely uncharted territory. We've never had an asset like this before.
Jamie Leverton is the CEO of ReserveOne. Jamie explains why she left traditional tech to build a digital asset reserve from the ground up, how ReserveOne blends Bitcoin, yield generation, and diversified token exposure, and why breaking out of crypto's jargon is essential for bringing institutional investors into the space. So you're bullish for 2026?
I'm very bullish for 2026. I'm on record saying I think the Bitcoin 4-year cycle, we've seen an end of that.
So then what does it look like after these 4-year cycles or no more?
Who knows? I think we'll find new territory. The signals before were more clear because you didn't have all of these competing noise from institutions. I think we're in new territory.
Jamie, thank you for having me in, and thank you for coming on the show today.
My pleasure. It's great having you here.
Yeah, I'm so excited to do this. To start off, can you tell us a little bit about yourself, how you got into the space? I know you were previously the CEO of Hut 8. Was that really your first foray in, or what really brought you here?
You know, the first time I got into the space was actually 2017, 2018. I had a friend, I'm from Canada, and I ran into a friend in Ottawa, and he started talking to me about what he was doing in Bitcoin. He was actually doing this kind of marketing promotion thing, giving away Bitcoin on Twitter. And that was the first I heard of it. I was running a data center company at that time, Kojiko Pier 1. I was the general manager of Canada and Asia Pacific. And that all kind of coincided with this 17-18 bull run for Bitcoin. And so around the same time that I got introduced to the topic through my friend Kyle Kemper, we got this explosion of inbound demand coming into our data centers for people looking for megawatts worth of power. And at that time, the only people looking for megawatts worth of power in the data center space were the hyperscalers, maybe Netflix, YouTube, but they were big known brands. And we started to get calls from, people I'd never heard of, just random people looking for megawatts power. And they were Bitcoin miners that were looking for space to mine Bitcoin because the economics in that bull run were so significant that they felt like they could afford to pay traditional data center rates. Ultimately, that didn't work out when that market turned over. Most of those Bitcoin miners that were operating in traditional data centers went bankrupt, and the Bitcoin mining compute actually doesn't get along very well with traditional data center compute, which is a whole other story. But that was kind of how I got interested in the topic. Then I started doing a ton of research. I started speaking about blockchain and kind of the possible future of where blockchain could go, how it could possibly be disruptive or complementary to traditional data center environments. And then in 2000, I was approached by the board of directors of Hut 8. Hut 8 at that time was distressed. It was a Canadian publicly traded Bitcoin miner, but had gone through some difficult times in the COVID liquidity crash, which impacted Bitcoin as well. So I took over officially as CEO that fall, and the rest is history from a Hut 8 perspective. And I've been squarely in the space pretty much full time since then.
And what drew you to ReserveOne then?
ReserveOne is a fascinating opportunity for me. So typically, if you look at my career, I started at IBM in 2000 and really spent the first 25 years working for largely publicly traded companies in traditional tech and then digital assets with Hut 8. But the majority of my career I've been focused on transformation type mandates. So going into business units or companies that were that had challenges or were looking for a significant kind of step function change in their business. And the opportunity that presented itself here at ReserveOne was actually to build something from the ground up. So not going into something that needed to be fixed or needed to be transformed, but actually building something with an incredible team of people that we felt was unique in the market, would serve a purpose for investors that we're really passionate about, and I can just build it the way I want.
Yeah, and how do you want to build it?
Exactly.
There you go. Yeah.
Yeah. I mean, I think certainly assembling a team is the most important part. Having the right people around the table, we're incredibly blessed here. I'm blessed that Sebastian Bea came over to join as my kind of partner in crime, as our president and chief investment officer. And then we've got just a great team around us, our chief marketing officer, general counsel, CFO, just really, really great people. We joke that we're probably one of the more seasoned team in this space. We've all spent a lot of time in traditional markets before finding our way into crypto, either before now or some of my team, this is their first time coming into the digital asset space. And then if you look at our proposed slate of board members, just an incredible cross section between TradFi experience on Wall Street, with Chin Chu and his background at Blackstone. Sebastian spent a bunch of time at BlackRock, and then we've got Wilbur Ross, obviously just an amazing Wall Street visionary, and then spent a lot of time in Washington as our former Commerce Secretary. And then we've got Gabriel Abed, who's just an incredible leader in the crypto space, as well as John D'Agostino from Coinbase, Reeve Collins, one of the original co-founders of Tether. So really just an incredible cross section of amazing talent, depth of experience across the three pillars that we think really matter in building out a company, especially a publicly traded company of this size, which is really, experience in the digital asset space, a deep understanding of how it works and where we think the industry needs to go, as well as that deep TradFi and regulatory experience. So I think just building a team that's very much aligned on vision, mission, and how we want to go about getting there, as well as just really positive and collaborative. It's a great place to start, and I think we built a structure that is particularly unique in the space, and are just really excited to get it over the line here with our last approvals.
Yeah, is there anything specific that all of you guys kind of carry from your traditional financial days, or the first 25 years of your career that you now want to apply to this side? Because obviously it's going to be publicly traded, so that operates within the traditional markets, but then there's like the crypto aspect, which is a very new-ish sector to traditional investors, and they're eyeing it through these like publicly traded vehicles, and they want to get involved, but it's I think perceived very differently, right? So how do you guys kind of think about, okay, the experience that we have in the past, and we're going to now apply that to this to create something new, and also like maybe loop it all in together?
Yeah, I think it's really important that we bridge kind of the language. I think in order to make the digital asset space more accessible to traditional financial investors, we can be pretty jargon heavy. The cryptoverse speaks kind of its own language, its own shorthand. It can be overly technical. We can overly complicate how we talk about things. A lot of the ways we've chosen to name what we do in the space has complicated things. It wasn't intentional that it would be complicated, but just if you think about the lexicon of Bitcoin mining, that can confuse people right out of the gate. I mean, people still ask me whether picks and shovels are involved. So we haven't done ourselves any favors with the language that we use. And so I think for us at ReserveOne, it's really important that we are constantly checking ourselves, and that we're making we're talking about the business in a way that really bridges one world to the next, so that we bring people on the journey into this new space in a way that they feel welcome, and we're getting them excited to learn.
Yes. When does ReserveOne plan to launch?
So we are very much in process with the SEC. It's our S4 is filed and available for public consumption for anyone who wants to spend time reading
those docs,
or so pages. So look, we're hopeful that within the next few months everything will be ticked and tied, and at that time, when the deal closes, is when we actually get access to our funding, which we raised back in July when the business combination agreement was announced. So, I think a really interesting time and place for us to be able to start deploying that capital and really putting our fiat to work in the business model that we've orchestrated.
And it plans to launch as a publicly traded digital asset reserve with diversified access to crypto.
That's right.
For a lot of people, we refer to these as DATs, right? Digital asset treasuries. I think this is maybe a bit more complex than that. So how would you differentiate it from other DATs out there?
Yeah, I think the kind of DAT 1.0 was really focused on single assets. So they were predominantly just accumulating one asset. A lot of them were intended to be passive, so not putting the assets that they held on their balance sheet to work, and really just being an accumulation vehicle. So a purely accumulation vehicle for a single token. That's very different from ReserveOne, where we're the only scaled, diversified treasury reserve company that I'm aware of. So 80% Bitcoin, 20% alternative assets, really inspired by what the digital the Fed intends to maintain in the digital asset stockpile, which so far they've indicated Ethereum, Solana, XRP, and ADA. And then we're setting up our allocation based on those tokens' free float market cap and ability to generate yield. So overweight Ethereum and Solana because of their free floats and ability to generate yield. And really, we intend to generate returns on our entire asset base. So not a passive accumulation strategy, actually putting the assets to work. And then another thing that's different about our structure is we do have the ability to allocate our AUM into high conviction venture or private market opportunities as well, be it liquid or illiquid, but opportunities where we can offer exposure to investments that we think support either on the accumulation side, advancement of the ecosystem, the yield. So really, if you kind of think about the entire package of what we're offering here at ReserveOne, the offering investors the opportunity to get exposure to kind of the upgrade of the financial system, but in one equity.
Is it almost like a publicly traded Federal Reserve digital asset stockpile then? Because I know you said they have a similar model, right?
Yeah, so the Fed, what we've heard from them is their obviously intention to maintain a strategic Bitcoin reserve, and then they confiscate a number of assets, digital assets included through law enforcement activities.
Right, seizures and things like that.
Exactly. But they only intend to maintain a small number of tokens that they wouldn't auction off or sell like they do with other confiscated assets. So really taking inspiration from how we've seen the Fed really actively step into supporting this space and their very intentional activities in believing in these assets as longer term stores of value.
The digital asset treasury side of things isn't new, and we've seen a lot of these ones pop up, like you said, more specifically on like a specific asset than like a pool of them or a different kind of diversified portfolio, right? But it's been around for like 12 to 18 months. And I know I've heard Sebastian say this on another podcast that for a lot of these traditional firms, it's like if you're not first, you're not doing it, that first mover advantage. So how do you guys think about that? Because obviously they've been around for, a bit over a year, and there are other ones that are popping up. And so in a competitive landscape, what do you think will really make ReserveOne stand out?
Yeah, I mean, I think if you really go back, Hadi was one of the first public companies to hold Bitcoin on balance sheet. And then at the beginning of 2021, I was the first mining CEO to say we were not going to sell any of the Bitcoin we mined for the foreseeable future. And then most of the Bitcoin mining industry kind of followed suit shortly thereafter. And around that same time, it was summer of 2020 that Michael Saylor stepped into his strategy with Bitcoin accumulation. And that was really kind of the first DATs, as you will, were the miners and then strategy. And the miners during when they first became public. So Hive was the first to be publicly traded in 2017, started on the Toronto Venture Exchange, quickly followed by a Hut 8 in 2018, also originally on the Venture. And they were initially stood up to give traditional investors access to Bitcoin exposure. And that was the only way they could do that through an equity, because what we were hearing from a lot of traditional investors back then was they wanted to get access to Bitcoin as an underlying commodity or investment vehicle, but they didn't want to do that with what was available online at the time. They didn't want to deal with exchanges that they weren't comfortable with. They didn't want to figure out how to,
They couldn't even touch it,
self-custody.
some of them.
No.
Yeah. Or even
no.
today. Yeah.
Exactly.
Give or take. But yeah.
And so what they were looking for was exposure, but just in a pure equity. And that was really all that was available to them. But I would argue that was kind of the early days of digital asset treasury companies were the miners when miners started to hodl, and then strategy. And then we've seen kind of this wave of new entrants over the last 12, 18 months, where they're looking to give investors something similar in a different format. So the single asset passive strategy was really about stripping out the operating risk that a miner had. So you invest in a miner, you still are taking exposure to the capital they need to invest in upgrading the mining equipment. It's not a pure proxy to Bitcoin. So the digital asset treasury companies that came around next, similar to what MicroStrategy had done with Strategy, were let's give investors access to different types of digital assets, but is a direct one-to-one exposure where they don't have the operating exposure. It's just pure token exposure.
Yeah.
And then you come to kind of DAT 2.0, or maybe it's 3.0 now, given how I've just talked you through it. But it's really, okay, giving investors exposure to something a little bit more robust, a little bit more diversified. And that's really where ReserveOne comes in. It's not a single asset. It is active as far as generating yield. It also gives exposure to other types of investments. So again, looking for to fill a gap in the market that we think investors are really interested in, which is getting broader exposure to the digital asset ecosystem, but again, in a single equity, which is how they're most comfortable investing.
Mm-hmm. What would you say these sophisticated investors now understand that they didn't a few years ago, and what they want?
I think we're still very early. I think in the last 12, 15 months, as we've gotten increased regulatory clarity and kind of broader support from the US government, it's brought a new wave of interest from investors that had probably not really wanted to look at the asset class before they felt like it was being legitimized by the government or by regulators. So I think there are a lot of new people that are curious about the space and just really starting to take a look at it. And that's what we're trying to bridge. That's really who we're talking to and focused on are the people that are new, are looking for something different, and are still very much in the exploratory stage of learning what this space is all about and trying to figure out how they want access or exposure to it.
Mm-hmm. What would you say are still the misconceptions when you call people up and you're like, oh, that's actually not correct, especially at like this boardroom level? Because you're probably calling a lot of high level executives trying to get them involved, right?
Yeah, it is shocking to me. And we do live a bit in our own echo chamber, I think, in this space when you've been here as long as many of us have. But there is still a conversation that you have to have around some of the FUD that's out there about Bitcoin being used for illicit activities, for criminals, for drug dealers. Bitcoin's energy usage is something that needs a lot of explanation, and we need to spend a lot of time on. But certainly, it's time well spent, and I think it's important that people kind of come up the curve of understanding in a way that they're ultimately comfortable with.
Mm-hmm. How do you kind of think about the 2025 market versus what we're entering or have entered of the 2026 market?
Yeah, 2025 I think surprised us all. Bitcoin has a 4-year cycle that has been pretty consistent. Well, it's been actually entirely consistent historically, and it would have marked a peak in 2025. And normally in 2025, or normally in a peak bull market, we see a lot of indicators that we track. There are about 20 key indicators that we look at to see where we are in this historical Bitcoin cycle. And we really didn't hit any of them in 2025. So the cycle didn't behave the way it historically behaved, despite an incredible setup. So coming into 2025, we had just incredibly bullish
kind of regulatory tailwinds. I mean, come on.
With regulatory tailwinds. We had Genius come out of the gate with bipartisan support really early. Obviously, as I've already talked about, the Fed talked about the strategic Bitcoin reserve, the digital asset stockpile. We had Clarity kind of kicking off, and really, I think we're hoping that we'd get Clarity through in 2025. And then we saw the markets behave in a way that wasn't what we thought. We had all of these tailwinds, and yet it kind of languished. In fact, one of the things Sebastian and I were talking about a couple weeks ago, where if you actually look at the best performing ETFs last year, the Bitcoin ETFs were incredibly well performing. IBIT, one of the top performing ETFs, and yet it had negative performance. It was the only ETF I think it was the top 20 that was actually down on the year. It was -6 on the year. Every other ETF was well into double-digit green, and that's just something you never see. So we had this really strange environment where retail was coming into the space. Institutional flows continued to come in through strategy, through all the new DATs. We had incredible support coming from the Fed, and yet price action was sideways, and gold like monstrously outperformed Bitcoin.
Yeah.
So really just two different stories happening within 2025 that I think ultimately have got us into a position where I think 2026 is going to be a really positive year, and we may see from 2026 what we thought we would see from 2025. Unfortunately, we still seeing some consternation around Clarity. We were hoping Clarity would have moved a little bit more quickly coming into the year here, but still lots of amazing people doing great work, and hopeful that something can get through here in the next few months.
So you're bullish for 2026?
I am very bullish for 2026. And I'm on record saying I think the Bitcoin 4-year cycle, we've seen an end of that, but certainly we won't know that whether that's true for sure until we get a little further into 2026.
So then what does it look like after these 4-year cycles or no more? Just
who knows? I think we'll find new territory. The signals before were more clear because you didn't have all of these the competing noise from institutions, derivatives. So I think we're in new territory, and we don't have a historical cycle that we can lean on now, and we have to see what the charts are going to do as we move forward here with an era of broader sovereign support, government support, and just increasingly massive institutional inflows.
월 10만 원짜리 AI 디자인팀 이젠 무제한 무료 이런 낙서도
Institutional inflows.
Yeah, I saw a funny tweet from an analyst that I follow that was like, wake me up if Bitcoin goes below 89,000 or above 105, because right now it's just sitting in this like 90 range, right? And like obviously it peaked around like 125, 126
in October, right? Before 10/10.
Yeah, before that massive liquidation event.
That's right.
But I mean, do you see it kind of breaking through those points again, or like if we're out of this 4-year cycle, what does that really look like? Is it less volatility? Or is it new highs, hopefully, right?
We've definitely seen volatility dampen over time, which is what you would expect. Over time, of course, we expect to see new highs. Bitcoin's got that incredibly unique property that we know it has a finite amount. In the year 2140 is when the last Bitcoin will come into circulation. We've never had an asset like that, and
where it just stops, where it's finite.
It is finite. It's truly finite, and I think we're something like 50 days away from the 20th million Bitcoin coming into circulation. So meaning we only have 1 million Bitcoin more that will come into circulation in the next, whatever it is, 114 years. So that, again, we're in completely uncharted territory. We've never had an asset like this before, and we're very much into the end of what circulation is going to bring.
Is there a certain target number that ReserveOne wants to have for Bitcoin?
I do not have a target number. No. No, I really don't. I just think, up and to the right consistently over time is a good thing. And I think that the number people look to most often is gold. Like, how does Bitcoin eventually stabilize relative to gold?
Mm-hmm. Yeah. When you zoom out, you've been in the public markets for a long time. You're obviously very smart. So what do you think really matters in the markets today?
Oh,
what are you paying attention to?
I think I can answer that in two ways. I think what really matters in being a public company executive fiduciary is trust and transparency.
Yeah.
I think that's absolutely paramount to sitting in this chair and just being as transparent and open and honest as you can with your with all of your stakeholders. I think that's critical. Trust is critical. And broadly, I think trust is something that we're kind of starved for right now in this AI world. There's so much out there that we don't know what's real and what's not real, and so more than ever, I think trust and authenticity matter. And as far as broader markets, look, it's every day. You don't know what headline you're going to wake up to, whether it's geopolitical or crypto. And I think keeping up to speed on everything that can impact your world is important. It's difficult to do, but it's important. We've actually set up this awesome Slack bot that gives us incredible news in real time and makes it really easy to digest and consume. So we're not living on crypto Twitter all the time. Yeah. But yeah, certainly keeping up to speed with the macro and being able to, as much as possible, adjust in real time or ahead, which is not easy to do, but it's historically been beneficial to me in my chair.
Yeah, for sure. When you think about like the macro side of things, interest rates, regulatory environment, geopolitics, and all those different things, how has that kind of changed the investor attitude into, let's say, 2026 in this new year?
Yeah, that's a really difficult question to answer, because in a lot of ways, I think there's so much noise and there's so much uncertainty. There's an increasing almost kind of numbness or apathy to it. And I think people are getting just more focused on what's right for them in their portfolio, given their age and stage and goals, and maybe just tuning out the broader environment a little bit, maybe getting a little bit more conservative because things are so noisy. Just to your earlier commentary around Bitcoin price, in the last 2 days, I read one article saying we're at a critical 60-day point in the chart where Bitcoin normally has a big breakout phase from right here. And then this morning I read an article saying the technicals suggest Bitcoin going to 58. So there's just there is no consistency.
Shooting in the dark.
Completely. So you just kind of have to figure out what makes the most sense for you and how you're thinking about your time horizons.
Yes.
And risk appetite.
Right. So for like new entrants and then the kind of traditional allocators, it's really dependent on what they're used to.
What they're used to, what they're comfortable with.
Mm-hmm. Like for conviction versus risk management and all these things in between.
Yeah, I think diversification is becoming increasingly important, because you just don't know which portion of the portfolio is going to be volatile and more volatile on any given day, given all of the noise globally.
Yeah. We've talked about this on the show a lot too, is kind of like the crypto IPO boom. And it's not just for DATs, it's for exchanges and products and things like that. We've seen a number of these pop up over the past year, probably due to the more kind regulatory environment like we've talked about. But what's kind of your take on this? Do you think it's better for a lot of these crypto companies to be IPOing to give exposure? Or how do you think about the general crypto IPO landscape?
Yeah, there was a big gap. We didn't see a lot coming to market in the 21 to 24
was quiet.
It was quiet, very quiet.
Yeah.
I think the year that Hut 8 did its merger with USBTC and redomiciled to become a direct registrant in the US, I think there were only 2 digital asset transactions that came through that year, which is a really low number versus what we've seen in the past 12 months in the space. So I think there was a bit of a backlog of pent up demand. there's no question that getting access to U.S. capital markets and U.S. liquidity is important for companies that have a long-term kind of growth horizon in mind. There's nothing like this market, and it's certainly much easier to navigate now. And there's an appetite that it's more open for business, and so I think we're just seeing that backlog clear, and then eventually we'll get to a more normalized state.
Do you think it's kind of changed the public perception on crypto for the better, ideally, or is it kind of still iffy?
I don't know if the IPOs themselves have had as much an impact on sentiment as the things that are happening in kind of the broader arena. I think we've definitely seen some things overperform expectations and some things underperform. So I would say it's kind of broadly been neutral as far as what's come to market, and probably hasn't had a direct one-to-one impact on overall sentiment.
Mm-hmm. When you think about the crypto industry as a whole, I continue to see new startups pop up. There's innovation happening, but then there's also kind of like the sophistication of the industry and the maturation of it all. And I think we've kind of like dove into that throughout this conversation. But do you kind of see this as crypto entering a new era, maybe like an operational era, or like a more, I hate to say it like this, but serious era than like what we have previously operated in?
Yeah, maybe not more serious, but maybe more mature, more institutional, more professional. I think I'm just finishing reading Crypto Dad, which Chris Giancarlo wrote, and really spends a lot of time around his time spent at the CFTC and at that time working with Jay Clayton, who was running the SEC. And Chris was trying to bring Bitcoin futures responsibly into the purview of the CFTC, and at the same time, Jay Clayton was fighting the ICO boom of that 17-18 cycle, which was really the Wild West for crypto, and just two different sides of the same coin back then. But now with what we've seen in DATs the last 12 to 18 months, they're coming through the front door. They're working directly with regulators. Those are publicly traded vehicles. So kind of night and day difference from that ICO craze. Mm-hmm. But still a lot of people coming into the space that have less experience in public markets or traditional finance, and more kind of deep crypto industry experience now coming into the public markets for the first time. So there's some friction and learning that comes through that. But I think the next wave will be that those learning growing pains of first coming into the public market space, that won't be true in the next wave of whatever we see. I think you'll see the inexperienced have now become experienced in the last 18 months. And those of us that have been here a long time we're just the seasoned ones.
Yeah, for sure. What about the financial opportunities and use cases that are coming as a result of this?
Yeah, I think probably the most exciting thing we've seen this year that's specifically tied to use cases that are really working would be Figure and what Figure has done. So really solving a very specific problem on chain, and they've had just incredible results on the back of that. So my assumption is over the next few years we'll see more of that, like really solving real world problems with crypto in a meaningful way. And that's something to get really excited about.
Mm-hmm. And do you kind of see the convergence of the traditional financial industry with the crypto industry? Because like Figure is a prime example of that.
Yeah. I think Figure is probably the thing that I've been most excited watching over the past 12, 18 months. There's some other really interesting things coming up. I don't want to pick favorites, but Figure's already out there. Lots of really interesting use cases coming that are going, I think in the next 12, 24 months, we'll see more and more directly solving real world problems that are bridging these two worlds in a way that is meaningful. And I think both TradFi and the digital asset space are going to get really excited about, and it's going to help with that whole bridging conversation that we keep coming back to.
100%. So what would the industry look like then in 5 to 10 years? Let's go further out.
10 years. That's like a
워킹맘 드디어 등원 전쟁.
Further out.
10 years. That's like a
because think about
years
like
in crypto.
5 plus years ago, you started at Hut 8, right? And things have changed so much.
So much. Oh gosh, so much. It was back then it was so hard to get insurance that I was used to getting before
Crazy.
my
Even
digital
a bank
asset
account.
days, auditors,
Yeah.
bank accounts. Yeah, it was wild versus what the aperture that's open to us now when it comes to professional services and support. I think 5 to 10 years, will we be fully tokenized on-chain world? No. But do I think longer term, we're going to see increasingly kind of the eradication of legacy analog financial services systems? I think we will. I think we need to. I don't think my children, my daughters are 15 and 17. I don't think they would put up with a world that, took as long to transact as the historical financial industry does. And they've grown up in a world that's entirely digital. My youngest daughter, I joke, she was the firstborn when we had iPads, so her fingertip has controlled her universe since she was born.
Yeah.
And she's gonna expect. She just grew up playing Roblox. She's a digital asset native from that perspective, and she's going to expect to come into a world that is as efficient as that of her childhood.
Yeah, and it happens with that speed.
100, absolutely. Why would she settle for anything else?
What do your kids think about your job? Do they get it? They're in it?
You know what? I've been very fortunate being around it as long as I have, and I've given them exposure to it. I've taken them to conferences. I've had them help teach a Crypto for Kids class. So they are well versed. I would always love them to be a little bit even better versed, but they think it's very cool. They think it's very cool that they've got a Bitcoin mom. And anything that makes them think I'm cool is good for me.
Awesome. I love it.
Yeah.
Aside from everything that we've discussed, Jamie, what else are you paying attention to that you think the listeners should be following as well?
Certainly following what's happening in Washington. Clarity is something that it's really important for us to get done as an industry. We really need clear rules of the road to get the next leg up as far as innovation and capital formation around our industry. That's the last kind of key thing that we're all waiting for. I think that's critical. I think looking at what's happening even outside of our borders, how are other nations starting to talk about their digital asset reserves, potentially their Bitcoin accumulation strategy, which we're hearing we're hearing from other sovereigns. We're also hearing from states directly within the U.S. So kind of paying attention to how other governments, whether it's local or international, are thinking about the space, how they're thinking about central bank digital currencies. That's an important area to watch as well, and how that interacts or differs from what Bitcoin solves for, what some of the other blockchains that are already here and are decentralized are solving for. I think that's an important area for people to understand the pros and the cons and how they can over time work together and support each other, which I think there's a great opportunity for. One of the areas I think we as a species need to pay attention to is, to one of my earlier points, is truth and provenance. So really understanding what's real and what's not real, as far as what we're consuming online and in our everyday. I think we need to get back to a place where we can believe in what we're reading and we can believe in what we're hearing. And there are some really interesting projects that are going on in the space, and I think are important that we find a way to get behind, because I do think we need to bring truth and provenance back into our everyday, and that's something that's sorely lacking and has real world negative ramifications if we don't figure out how to solve for it sooner rather than later.
I agree 100% on that side of the truth, the trust, everything else in between. You brought up sovereign nations. Are you having conversations with them? And if so, what does that look like?
In the world of digital assets, we have a lot of conferences because it is really a global industry. We get together and speak at large conferences all over the world, and have, since really the foundation or formation of the industry. And since for the entire time I've been here, regulators and sovereign nations have been in the room. They may not say publicly what they're doing, but they're in the room, they're learning, they're educating, they're active. And I think that's only going to continue. They've been doing the work for many years and continue to do the work, and how they ultimately make decisions on their allocation or their infrastructure. They'll decide when they tell us what they're up to, but make no mistake, they've been here almost the whole time.
Amazing. Jamie, last thing, can you leave us with a piece of advice, something that you've carried with you throughout your career?
I think the best piece of advice I can give, and I try to take myself on a daily basis, is just to stay humble, to stay open, to stay curious. I think the minute you start thinking you have the answers or closing yourself off from new perspectives, new ideas, new information is when things get dangerous. So I think just challenging yourself to keep the humility, keep the curiosity, surround yourself with people that have different views, different opinions, are smarter than you in certain things. I think the more you can do that, the better leader you'll be, the better human you'll be, the better parent you'll be. And that's the most important thing.
I love it. Amazing. Thank you so much for coming on today.
Thanks again for having me. Always good to see you.
You too.